Hello, I am the Stock Options Hero, and from here on out, I'm going to share with you stock options secrets that only the most successful option traders know. In my videos, you are going to see my secret options trading system that only a handful of people know. And as I'm sure you're well aware of by now, options trading can be very lucrative. However, most options traders are not consistently successful, or even worse, lose money trading stock options. Trading stock options can be a high probability trade if done properly. Let me show you. Now, each day I will record a video where I play simulated options trades. So subscribe to my channel and watch my videos daily to learn how you too can be a successful stock options trader. Disclaimer: these videos are for educational and entertainment purposes only and does not constitute a recommendation to buy or sell any securities or stock options. Before I dive into today's stock options video, I have a small favor to ask. If you like this video or any of my videos, please subscribe to my channel and hit the bell icon so you will see my videos as soon as they are posted. This way, you won't miss out on any paper trading ideas. Tell me in the comments section which option trades you are looking at paper trading, and if you're lucky, I might do analysis on a ticker symbol from the comments section. All right, let's leap into today's video. Welcome to another exciting video of Options Trading for Beginners, brought to you by the Stock Options Hero. Today's emphasis will be on zero DTE orders on SPX. Alright, so the SPX orders I placed yesterday had already filled, and I've got an open order. Let's see here. On the 40.95 and the 40.90. So let's switch back. So this is what the daily chart looks like on the SPX. So definitely looking bearish, just based on price action, the MACD, and stochastic. So looks like we will be continuing the bearish trend. And I've got my limit price sitting out there. That's one of the downsides to trading zero DTE is they fluctuate very quickly. Well, maybe that's not a terrible thing, but I put my limit order in, and normally it fills right away. But I think I put it in like around this candle, right around here where my cursor is, and then the price continued to run up, and now it's starting to show weakness. So if it comes down and double bottoms here, or touches this level, then I should get filled. If I wanted it to fill right now, I could get a 65-cent credit, which is still within my 10% requirement. So hold on, sorry. So 65 divided by my buying power effect is roughly 15% return on capital. Right, so do I want to be greedy or do I want to chase it? With as weak as it's been so far today, I think there's a really good chance that the price will continue to get hammered to the downside. So let's see, 5, 10, 15, 20, 25, 30. So probably within the next 30 to 45 minutes, we may see this level be hit again, or at least touched. So I've already made money on SPX today. So $435 from my previous trade. I had a iron condor on it. So very nice profit for a 24-hour trade. I'm really liking the 0 and 1 DTE trades. So let's see what the April 26 is trading at. We do the 47, 40.65. You know what? Maybe that's the trade I had in previously. So 4070 is way down here. So it's saying it's got a 83% chance of expiring out of the money. So it's nice. ROC 70 divided by 430, 16%. We can do 2 contracts. So risk 870 to make 130. And once again, we have an 83% chance of max profit, or in other words, the credit spread expiring out of the money, which is what you want. And the theta decay is $3.64. So basically, the contract will be next to worthless tomorrow, which makes sense because tomorrow will be expiration. So let's see. Yeah, let's do it. So I sent that out. Okay, that was fast. So that one filled. So let's go back to the one from today. Just go to the monitor tab, working orders, scroll down. So it's saying it's at $1. It's now down to 80 cents, which makes sense because it's rallying. So if you're not sure what to do in this case, my thought would be to wait until the stochastic is once again in the oversold territory, for entering your bull put spread. So once again, I generally wait for the price of the underlier to be in the bottom LRC band right here. So you got the LRC -1 standard deviation and the LRC -2 standard deviation. And I like to see it in this area or even touching the -2 LRC. So my guess is the price will fall back down probably to at least the 41.05, maybe 41.04 level before double bottoming. So just looking over the last 5 days, SPX has generally followed this LRC with a few exceptions, like right here and right here. So today is another exception. So we'll see. I won't be upset if this limit order doesn't get triggered today because I've already traded this expiration date. Besides if I want to be really greedy, I could always put the trade around 41.05. So let's see. Usually it will say the expected price down here, but it's not. So I think it'll be around $1.35. So let's wait for the old one to cancel, the new one to be submitted. And we can go back to the chart. And yeah, see. I don't know if it will go back down there, so let's maybe drop it to $1.25. Yeah, there we go. That looks better. So I give it a pretty good chance to double bottom in this area. So anyway, I wanted to quickly go over my overall profit loss year to date. Since I started recording my videos a little over 2 weeks ago, I'm up 12,052, got 80,912 in cash. Don't worry about the Forex stuff. Net lick is 110,942. Cash and sweep is 115,471. Once again, the cash and sweep is if all of my options expire worthless, which is what we want because we are net sellers. Also, let's see. Okay, so we got the May 19. We've got 23 days to expiration, so let's take a look at BUR. I think this will be a good day to manage our position. So because we place the trades using a 1 year, 1 day, I want to continue using the 1 year, 1 day for managing the trade. So the chart's looking really good, actually. So So we've got the 75 call. Wait, what? Where'd BUR drop down here? Oh, that was weird. Went from a big loss to a $120 gain. So weird. Okay. So AZN, we're short 2 contracts on the 75 call. Alright, so yeah, it's $1.04 in the money. With the MACD looking like that, the stochastic up here, I'm pretty comfortable rolling this. So I have talked about rolling an option. So what we'll need to do first is go in and cancel our open orders. So to do that, you expand the symbol under the instrument column, come over here, left click, then bring it down, right click, then cancel. Okay, once you receive your cancel confirm, go back and left click on one leg, then hold down the control key, and then left click again, and then right click, and go down to create rolling order, and then just select the top option. And what it has is, since we sold to open the 75 and bought to open the 80, it has the reverse. So we're buying to close the 75 and selling to close the 80. And it has a selling to open the May 26. I don't like the weeklies, so maybe let's switch that to the monthly, June 16. Okay, so we can get a 24-cent credit. So right now we're down $239 on the position overall. So instead of being down $239, we're going to hopefully take in a 23-cent credit. So yeah, we'll send that off. And what that will do is give us more time for the trade to go our way. So we'll have 52 days instead of 24 days for it to revert back to the mean. So hopefully we'll get filled. Once we're filled, then we'll put it in for limit order to get out. But my guess is within the next month, it may revert back down to 68 or so. Hopefully. So, okay, so we've got that order in there. Now let's move to our next biggest loser. On. Got a 35 call. Okay, so not in the money, but we don't need to roll this, but I'm curious what kind of credit we can take in. So I'm just canceling the order real quick. Sometimes it's a little slow. Then left click, control, left click, then right click, create rolling order. Make sure it's on the next expiration month. We can get a 30-cent credit. Make sure you change it to GTC. And as a general rule, you mainly want to roll if you can get a credit. If you can't get a credit, then it may not be a good idea to roll. But that is your judgment call. Me personally, if it's between taking like a $350 loss or paying out $10 or $20 to roll, I mean, for me, it's kind of a no-brainer. I'm happy to pay a little bit out to potentially save a loss. So, okay, GTC, 30-cent credit. We'll send that out. And then GIS, 90 call. Yeah, this one is not cooperating, which I was hesitant because of the upward trend. So, and I think that was part of the problem. We entered the position when it was somewhat close to the mean. So let that be a good lesson to you, is don't enter a trade when it's this close to the mean. You rather want it to be touching or above the +1 or the -1 LRC, or the +2 or the -2 LRC. So when I see this on the MACD and the stochastic, that's bullish. So I'm going to hold off on rolling this because my guess is we'll probably go up to like 91, 92-ish before a reversal. So we'll definitely keep this on our radar. Moving on to our next biggest loser, TGTX, 25 call. X. Okay. Like the candle, looks good. Once again, we're in the short, the 25 call. So right here above the wick, so it looks like a shooting star. Maybe a good day to roll this. I mean, we might be relatively safe with this one, but here, let's cancel. Come on. Okay, it's just being really slow. Just because we roll it doesn't mean we can't get out of the trade early, right? So we could roll it for a quarter. And it'll require $150 in buying power. So once again, it's a $82 loss. Currently, and we could take in 75-cent credit minus $8 in commission. We'll get a credit of $67.20 and give us a little more time to be right. So that to me is worth it. I'm not overly worried about it, but I think it's a good practice lesson for you to get a little more exposure to rolling. So for that reason, I rolled it. Now, okay, 65 call. Excuse me, so zooming in. So this is where our call is, our short call. So with MACD and stochastic looking like that, I'm pretty comfortable not rolling this one. So I'm going to let this one ride. And then para, 25 call. Up here. Yeah. Not worried about that one either. So it looks like on, filled. Okay, so for what, IoT filled for the June 16, so I rolled this one as well. So, doing a 60-cent credit. I'm going to set up a 20-cent debit. Once again, I go for 50% of my original net credit to exit the position. Okay, so that's it. Pretty quick managing it. I would be much faster if I didn't slow down and explain as I went along. So this strategy is fairly successful and doesn't require a whole lot of time. Let's see, because of what SPX is looking like, I think today would be an ideal time to load up on some bear call spreads. So let's see what's out there. Okay. And save watch list as. So April 25th. Come over here. Load the newly saved watch list. Make sure you're sorting by implied volatility. You always want to start with the highest IV stocks because they have the juiciest premium on their options. Okay, AUPH. Looks like I might need a day or two because of where the stochastic is. So let's add that one to almost ready. But if you're checking your watch list daily or your new scan watch list daily, then you don't have to always look at your almost ready watch list because it should show up on my scan over the next few days. Okay. APLS. I don't like the upward trend, but I do like how it's touching this top LRC, which, as you can see, it hasn't done all year. And even from a 2-year perspective, it's way overbought. So let's go back to the 1 year. And when it's like this, that means that your entry is so important, because if you time it well, then you can have a great deal of cushion between your strike price and the last traded price of the underlier. So today would be an ideal time to put on a bear call spread. So let's see what we've got. Because it's a new position, I'm no longer considering May 19th. I'm now switching over to June 16. So we've got the 17 delta at 115, which is off the chart. I would be comfortable with a 100 strike. So even though it's a 37 delta, because we've got 52 days, I'm pretty comfortable with the short strike being at the 100. Plus, because it's closer to being in the money, it will be a more expensive option, which translates to a larger credit. So 145 divided by 355, 40-cent return on capital. Of course, because we're taking on more risk, because it's closer to being in the money, the greater the credit. So at the 100 strike, it's saying a 72.5% probability out of the money, but it's way up there. And with MACD being at the highest point all year, I'm comfortable putting on the trade. So 400, we could do 2 contracts, change that to GTC, risk 710, actually. 1065, yes, still under 1% of our net lick. Let's do it. If we were looking at it back here, I would say yes. In fact, I think we did trade this. I think we're already gotten out of it. So, dash. So yeah, we're in it because we've got this +2 limit. We're in this one, looking good. This one isn't quite ready. I like the downward trend. I would like to see it trade above the +1 LRC. Let's add this one to the almost ready. Because they had earnings. There's a conference call. So I would give it a few days post earnings to let the price settle down a little bit. Once again, when you have these, it's like a pennant pattern, and it breaks below support, the target price is the distance between the support and the resistance. To be conservative, you can calculate it based off the body of the candles and then subtract it from the level of support to the downside when it breaks to the downside like this to determine your approximate target price. Okay, CNK, we're in it. I'm like, ooh, that's, I'm already in that one. Never mind. Okay, so Crocs. I remember, I don't like the upward trend, but I do like where the MACD and the stochastic are. So, 160. Let's see. Let's go for 175.80. And this 175 is up here. It gives us quite a bit of space. With the MACD being this far up or overbought, I think there's little chance for it to touch, let alone close above that by expiration, especially with the market turning to the downside. So we can do 2 contracts, GTC. So we've got 174 divided by 826, 21%. Nice. We will take it. And moving on. So when the market has a great entry like we're seeing today, you want to put on as many positions as you can that adhere strictly to your rules. I don't like the upward trend, but it does look like it's double topping. So what if like a 400 strike? That's a 30 delta. They're 10 wide. Okay. That being said, it's still a decent credit, so 36%. Yeah, let's take another look at the short strike level. So 400 up here. Yeah, let's do it. Okay, so moving on. Bito. No, well, no. If it were back here, say around like 414 or 417, I would have gone short, but with the stochastic crossing and the oversold region, most likely will cross up, so we'll most likely see a rally in the share price in the next few days. So I'm going to hold off. What? That's share price doubled. Interesting. And of course, the candles look like it's not very liquid. So, yeah, there's nothing. No credit. Unless you do it right at the money. Oh, even at 12.50. $15. So I guess the question is, do you think the share price will stay above 12.50? You'd want to double check to see if there was some kind of merger or a buyout to where the price of the underlier is fixed. Because if someone came out saying we'll give you $14.50 a share, that might be why the price is just kind of a little trending sideways. So this chart tells me some additional due diligence may be warranted before entering a trade, because if someone's offering $14.50 per share and they accept, and then you put it on a trade at $12.50, then you're losing $2 per share. Or not per share, but per contract, and you'll most likely hit your max loss. So, yeah. Not gonna entertain that. CRWD. I think we were in this one. We got out. See how it's approaching the mean, and the stochastics down here. I mean, we might be able to get a little bit more out of it, but like a 160. 165. No. I have to come up here. Oh, yeah, so look at the delta. Maybe do like a 150, 155. Yeah, we could still get 10%. Be up here. What do you think? Just for $50. Yeah. Sorry, my gut's telling me no. Okay, we're now under 50 IV. So, I think this is a gold stock, maybe, Endeavor. Could be double topping soon. I don't like the upward trend. So 27.50, 30, decent credit. So 65 divided by 185, 35% return on, 35% return on capital. It's giving us a 68 prob OTM, 37 delta. 27.50 would be up here. What does the 2-year look like? Yeah, I don't know. $15. You know what? Let's play. We'll try it. So I'm somewhat concerned about the upward trend, but I think 2750 should give us enough room. Just looking at the 12-month LRC, it hasn't really hung out much. I mean, it's not shy about breaking it, but then it will generally revert back to the mean pretty quickly thereafter. So, yeah, should be okay. I know this video is getting a little long, so I'm going to wrap it up here in a moment. BLDR. I don't like where the stochastic is, but I like MACD. Can we do like 100, 105? It's a 34 delta. What if we compromise to a 105, 110, 75% credit? Yeah, so 75 divided by 4, 25, 17.6 return on capital. Can do 2 contracts, GTC. Excuse me. So risk 850 to make 150. Yeah, we'll do it. Okay, so real quick before I end the video, let's go back to SPX, the 5-day. Oh, look at that. It double bottomed. And we got our fill. So this is a good example of being patient. You'll get paid for being patient up to a point, trading options. So remember how I said to wait for the stochastic to cross and the oversold territory? So like right here would be a great opportunity to put on a bull put spread, which is where we had our limit order set to. So it's kind of nice to put out a limit order and see where the line is showing you the price needs to be, so that if you need to step away from your computer, it's kind of on autopilot for at least getting into that trade. So SPX. Yeah, there we go. So yeah, good day so far. We are up 10:45 on the day and 10:32 since we opened these positions. Still got 76,000 in buying power, so we'll be a little more aggressive in the next few days, putting on bear call spreads because of where the SPX chart is on the 1-year daily. So yeah, now would be a good day to put on a bunch of bear call spreads. Anyway, so that's it. Thanks for your patience and watching this video all the way to the end. Please like, share, subscribe, and comment below. Thank you. Have a wonderful day and happy trading.